When we look at the economic data between Canada and the United States, we see some differences. But together, these are very high-income, wealthy countries, and we know that when we compare it to the world averages. So let's go ahead and start off looking at the top at GDP. So GDP, $1.55 billion in Canada last year, the most recent year available. That's really high. That's really, really good. That's a very developed, high-income country. Compare that to the United States, $18 trillion in terms of GDP. And so the United States economy, it ain't going anywhere. It might have slowdowns, it might have speed ups, but it ain't going anywhere. It is by far the biggest economy in the world. We look at GDP per capita, which of course kind of is something that we relate that to population size. Canada, United States, relatively big populations. And so if we divide that GDP by population, we see what is it per person in terms of the GDP that's produced in the country. In Canada, 43,000, United States, 56,000, world average, 10,000. Right there is a good indication, once again, very high income, wealthy countries. Now look at GDP growth. GDP growth is something that fluctuates from year to year. It's not something that's so easy to, have a trend line to showcase. It just kind of depends on what happens in a given year. You might have a hurricane that kind of devastates an area. You might have a tsunami like Japan that devastates Japan's GDP growth. Or you might have a recession like we had in 2008 in the United States, and maybe we still kind of have that going on today. So GDP per growth, we can see United States is right at the world average. Canada, a little bit below average. So that's something that they're getting a little bit of pressure there in Canada. Hey, do something about that 1.1%. Now we look at different sectors. We're first off looking at agriculture. The world average in terms of agriculture percentage of GDP, very high, 3.9% compared to the United States and Canada. Now, it's not saying that at all in Canada and the United States, well, we don't do much agriculture. No. We do a lot of agriculture. It's just we do a lot of other stuff. So it also speaks to the diversity of the Canadian and the United States economies. Next up, we have industry. And you can see here, industry is one area where Canada actually has a little bit higher than what we would think when we would associate other high-income countries or compared to the United States. See that 28.9, damn near 30% of its GDP comes from industry. And that's going to be from one particular industry, oil. You can also throw in a little bit there in terms of hydroelectric, but crude oil is by far the biggest thing for that 28.9% where we're seeing that industry number get bigger, especially compared to the United States. Is how much the Canadian economy relies on oil. I'll come back to that. Next up is manufacturing. You can see the role of deindustrialization. Manufacturing is not something you see happening here in large amounts in Canada and the United States, especially as the economies of the world globalize, especially as we can find cheaper labor somewhere else, especially as we add free trade agreements and multilateral agreements in which what ends up happening is low-income areas become the destination for factories, for manufacturing. So we'll come back to that. We'll look at some certain things that are manufactured still in Canada and the United States. We look at services across the world, and especially in developed countries like the United States and Canada. You see services combine a higher percentage of the GDP than other sectors. So services we also associate with tertiary sector. In terms of exports and imports, you can see differences there. In terms of exports, Canada is above the world average. In terms of imports, also above the world average. You look at the United States, very much lower than the world average in terms of exports and imports of goods and services. What's going on there is a lot of the stuff that we consume in the United States is manufactured or is essentially provided in the United States. So that's why the number is so low for exports and imports, is because we do so much of it on our own. We feed our own domestic market in terms of the goods and services we consume. Finally, we look at the bottom, high-tech exports. That's the thing, while other countries of the world might be exporting oil, timber, T-shirts, tennis shoes, in the United States, we export high-tech stuff. We export CAT scan machines. We export heart stents. We export stuff that is, very, very sophisticated electronics, computer programs, computer software, computer chips. So we're talking about high-tech exports. That's something you see in the United States, especially compared to Canada, much more of. Then I'm going to explain what we're looking at here. We have at the top, we have Canada, at the bottom, the United States. So each of these represents their total exports. And so there's that white line going through the middle. Everything in Canada is at the top, everything in the United States is at the bottom. So what this shows is 100% of the exports, and it breaks it down by category. So in Canada, mineral products is their number one export, number two, transportation, and then from there, machines, metals, and so forth. You look down at the bottom, the United States, mineral products aren't number one. In fact, mineral products are a little farther down. And that's going to be a key differentiation is we're going to see in these two different countries is one country pretty much relies on one mineral product, but relies on mineral products, primary sector, whereas in the United States, a little bit more diverse. But in both of these countries, you're going to see a lot of different colors. A lot of different colors means a lot of different sectors, a lot of different types of exports. That means they're very complex, very diverse. So that's very important. We're going to compare it to North Korea. We look at why these countries, if something bad happened in one particular segment, they're okay. They'll have other segments can kind of cushion that loss. Whereas in other countries, if they're over-relying on, let's say, mineral products, like the Middle East, boy, it's going to be bad news when suddenly that particular resource runs out or nobody wants it. And now we can break those down even farther by taking it one step further. And so crude petroleum is number one in terms of Canada, in terms of its export. Number two is cars. But nonetheless, we see crude petroleum, a big number there compared to the rest of them. Down to the bottom, actually, oil and petroleum and gas is the United States also our number one export in terms of one particular commodity. But you look at a suite of commodities, we could say this is the machines and transportation. So cars, we look at planes, helicopters. We're selling missiles. We're selling spacecraft. We also got our medical industries. We're selling all kinds of medical devices. So we have, in our case, we have a much more diversified economy than Canada, which relies much more on natural resources, in particular crude petroleum in various forms. And not to make fun, I'm not trying to poke fun at North Korea. All I'm just showing is how its economy is much less complex, much less diversity, also hardly anything going on there. You can see that in terms of the stuff they do export. First off, the numbers, you see total exports 3.1 billion compared to 1.45 trillion in the United States. So coal briquettes, and so how skilled is that? How much wage are you going to make by just digging out coal from the ground? Other things, the green category, that's textiles. In textiles, we associate with low-income labor. It doesn't take a lot of skills, and thus it's not a high wage for someone to stitch shoes or suits or socks, whatever. Other things you see is the role of agriculture, mollusks, and other things. And so we also see cheap metals as well, raw zinc. So complexity-wise, compared to Canada and the United States, North Korea, which is on the other end of the spectrum, is much lower. Now, in terms of the top export destinations of those goods, in Canada, it goes to the United States, overwhelmingly. So they're very dependent on the United States. Increasingly, they are reliant on China, but they do recognize this is a problem. They are over-reliant on the United States. Now, it's a good thing because the United States is a great market. I mean, why not have your exports go there? I mean, we demand a lot of stuff, and we like good stuff too. So cars, vehicles, electronics, all kinds of stuff that is being exported to the United States, and so it's a good thing. However, if the United States has a depression, Canada is, all of their eggs are in the U.S. basket. As we go, they go. So it's one of the things is a little different than at the bottom. The United States is much more diverse. And so the United States has Canada as a trading partner, exporter to Mexico as well, to China. So oftentimes these are things that are exported to Mexico, exported to Canada, exported to China, and then eventually actually imported back in from those said countries. So what's the deal with Canada and crude petroleum? It's got the third largest oil reserves in the world, so just behind Saudi Arabia and Venezuela. And so it's, for the most part, the situation's been where the United States has been the only person that has been trading oil with Canada. So we were and still are, the sole market for Canadian crude petroleum. So it's very important once again. So what's going to happen if, let's say the United States moves to different energy sources with more domestic sources from the United States instead of Canada? These are key concerns, but this is where it, helps to have a good relationship, a good friend, a friendly neighbor, and that's the case between Canada and the United States. So they'll definitely be working with each other to make sure they're not going to screw each other over. Also hire cars and vehicle parts. And that goes back to the 1960s when the United States was booming, as of course Canada was booming too after World War II. We were cranking out a lot of cars. People were buying cars in large numbers. So what ended up happening was a relationship started to develop between Canada and the United States, and so they had this auto pact. So this makes sense. If you look at the Rust Belt, it actually overlaps into Canada. So just across from Detroit is the city of Windsor. And so just across from Detroit, Motor City, there is a large automobile industry as well. And so this is also important to kind of this legacy that started with this auto pact, this agreement way back in the 1960s. Still continues to stay, although things are changing with NAFTA. Now we're looking more towards Mexico, we being the United States, as far as where our car parts are going to be assembled. Now, all this is good. Well, why not China? Why not Japan in terms of exporting cars to the United States or to Canada? So the key is cars are big suckers. And so to ship a whole, let's say 150, thousands of, let's say, cars across the Pacific Ocean costs a lot of money. And so by having a market on essentially the same landmass as where the cars are produced is a very good relationship. And so now it's moving to Mexico. And we'll come back to that when we talk about Mex America later in the semester. But this makes sense as far as this idea of cars being manufactured close to where their markets are because of the high transport costs that move these big suckers. This is a recent online viral map. Don't know if it's accurate or not, but if it is, which I think it is, I kind of fact checked some things, and what it shows is, once again, Canada. You can see how crude oil, we're importing in from Canada, and that's only increasing. What does the United States export to Canada? All kinds of stuff. And so, if you look at the United States, China manufactures a lot of stuff, and they're the ones that are going to get in the news, and everyone's going to know, where's it made? Probably made in China. But the United States does make a lot of stuff. And so, especially look at, high-tech stuff, computers, look at all that stuff in the bottom left. I mean, it's a little bit more high-tech than, cranking out irons, cranking out socks. So we can see HighTech Exports. Once again, you can see that there. We also, ironically, we export to Canada some oil, which is kind of ironic, but once again speaks to this relationship, very close and friendly relationship between these two countries, which they trade back and forth a lot of stuff. And of course, compared to our good friend North Korea, you can see how they completely over-rely on China. For their exports. And so what they're doing is they're cranking out a lot of those coal briquettes, those cheap metals, all that stuff that I mentioned beforehand is essentially being exported to China, where they're then being, they're going to manufacture that into irons, into socks, into all those various things I've mentioned. In sum, now we can look at the economic base of Canada and the United States. So we can say the economic base of Canada, definitely diverse. Very complex. And so it's not like it's one particular thing, one particular industry, but we did note that, oil and crude petroleum and this gas and all that stuff related to that particular energy sector, it's a big part of their economy up there in Canada. Down here in the United States, we're also quite diverse, quite complex. So you could say we do a lot of high-tech exports. We do a lot of medical devices. We do a lot of stuff related to healthcare. That's a good thing because across the world, people are living longer. And as they live longer, they want to keep living longer. And so we're going to continue to have something that we're manufacturing that is in demand across the world. And so although, cars, maybe people drive less cars going forward, who knows? But, we look at certain industries we're very, very, very good in, and that's a good thing because they're going to be in demand going in the future. So you could say our economic base is just in kicking ass.